Good morning from Chicago, traders. It is 8:15 Central Time, June 30th, 2014. Today is a Monday. Thanks for joining me. Trading futures options on futures and foreign currency involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations subject to change without notice. Past performance is not indicative of future results. Quick overview of last night, or the overnight news. French Q1 public debt rises to 93.6% of GDP. That's an amazing number, versus 91.8% in the fourth quarter. Eurozone June CPI estimate is in line year on year, came in at 0.5% for CPI. So this is the release that the ECB is paying particular attention to as they're fighting deflation. Note that some were looking for a higher number after the higher German CPI reported on Friday. CPI core comes in at 0.8% versus 0.7% consensus. The Bank of England's Bean says they could start unwinding quantitative easing at the same time as the next hike, or shortly thereafter. Market expectations for a first hike from the Bank of England are set for early next year. Or he says the first hike being expected early next year is reasonable. This morning, looking at the numbers, at about 8:42, it's set for 8:45 a.m. Chicago time, but it actually comes out at 8:42. This is a subscriber number. The Chicago PMI is expected at 63.0. Generally, we see a reaction in the market a little bit ahead of that at about 8:42. So caution if you have a position on at that point. Pending home sales expected at 9 o'clock, month-on-month 1.3%. Year-on-year, the previous was negative 9.4%. Dallas Fed manufacturing at 9:30, and then at 10:30 we have a 3-month $25 billion bill auction, 6-month bills for $23 billion as well. At 11:10 Central, Fed's Williams speaks about the economy. And of course, because it's Monday, let's take a look at the rest of the week. This evening at about 8 p.m. Central Time, we get China manufacturing PMI. Tomorrow, overnight, we get German manufacturing PMI, German unemployment change. And then in the morning, we get U.S. manufacturing PMI, construction spending, ISM manufacturing, and ISM prices paid. Quite a few numbers there. On Wednesday, because this is going to be the first week of the month, we have ADP employment, factory orders, and then we have Yellen on Wednesday at 10 a.m. Central, as well as crude oil at 9:30. On Thursday, Thursday's a big day. We have the non-farm payroll and unemployment numbers. We'll still get initial claims on Thursday, trade balance, PMI services, netty gas, ECB's rate decision, and ECB's Draghi comments, all on Thursday. Thursday is the big day. Probably we'll get pretty choppy Wednesday. Remember that Friday is a U.S. holiday. It is the 4th of July, Independence Day. There will be some numbers out of Germany, German factory orders, and then the Eurozone retail PMI numbers come out. But the markets are closed that day. The trade is expected to be dead. Check your CME calendar. It's expected that the markets will be open until about noon. Electronically, all pit markets are closed. All underlying or cash markets are closed as well. So everything that's supposed to take place on the first Friday of the month is taking place on Thursday. So make a note of that. Let's look at what we did on Friday and last week. Quick rundown. The Fed day brought us to the 1950 area, and since then we have basically gone into balance. We traded pretty much inside of the Fed release on the Thursday, not last week, but the week before. We popped up above it and came back in on Friday and Monday. Friday was that day with just 3.5 points of range and a very, very tough trade. And then Monday continued that trend. Then Tuesday popped higher to 1960, putting in a double top, basically with an overnight session from a while back, from earlier at 1960 before selling came in. Back then, it was news on Syrian bombing in Iraq or something, but I just don't know how that's driving our market. The market sold off on what ended up being a trend day. Point of control remained in the balance zone here, and then the market the next day opened at 37.75 and found buyers immediately. So it behaved like an open drive on Wednesday and pushed right back up into Tuesday's range. The 37.75 is the bottom. 37 even is the bottom of the FOMC breakout zone right here. You can see it right here. And we found buyers to take all of it back to the point of control in balance that day. We still put in a lower high, lower low on value and on price, as well as the point of control. The next day we opened above value and sold right off on what seemed like an open drive all the way down to 36.25, and then we found buyers to chop sideways and push back up to close in an upward distribution, a double distribution day, very clear. You can see a very nice taper in the profile as prices went lower, showing less and less interest. The market again tests below the 1940 area and finds buyers. On Friday, we opened in the lower distribution against just above the point of control, and the expectation was for it to battle here, turnover, test the 43, and then start to find buyers to continue higher. And the expectation was for 53, a test of 53 and 55.50. That was the primary hypothesis for Friday. Instead, it bounced right up, went into the upper distribution, chopped sideways, and then rolled over to go to 43.75. So we had a neutral day. We broke the IB high, then we broke the IB low, and then it continued to chop only to break higher at the end of the day. The market kept moving kept moving a ledge up and up and up and up, and finally broke through the 1950 to push to 1954. So it attained the 53 target we set out for the morning, could not get to 55.50. If you recall, 55.50 is the multiple tops here, multiple tops that we had on the balance days here, and it's a ledge. It shows up as a ledge in the composite. The expectation is that ledge would be taken out. The market's currently trading at 1952, 1951.75. It has not given up much on the overnight, pulled back to 1948, just 2 ticks below the point of control. The point of control overnight is at 51.50, and it's trading around it. Not much action on the overnight session. So we're opening above the larger distribution on Friday and into the smaller distribution on a double distribution profile of a neutral day. This day was almost a neutral extreme. This is a fairly bullish setup here, in my opinion, and I continue to look for 1955.50 and 1960 to be tested. We have an HVN here at 58.75, so we'll see what happens at that area. Let's look at the overnight real quick. The overnight profile has nothing to offer. Here it is, just traded sideways, not much going on during the Asian session. European session, same thing, and then it finally broke lower on the CPI news out of Europe, and it broke the point of control by 2 ticks, only to come back in what looks like a P-shaped profile, although the overnight profile doesn't really tell us much. We do have a funky looking high here at the 53 area, 52.50, 53 area right here. But the overnight profile is not telling us very much. 107,000 contracts traded. There's 225 expected. Volume still light. Let's take a quick look at the composite. We still have what appears to be a very unusual profile shape up here. There's a lot of consensus in these prices, everything from 53, 40, 48, 43, a lot of consensus, a lot of spikes in the profile here. The market's accepting all of these prices right now and has rejected everything below that. 37.75 we outlined last week, 37.75 being this low volume node. Every time it gets down in there, it finds buyers and pushes back up. But we still have an incredibly unusual profile on the top. This is not how excess prices are shown on the high end of a profile. So the expectation here, given the intermediate and long-term trends being firmly bullish, the expectation is for the market to just balance, accumulate the energy it needs, and it's doing a good job here at the 53 area, accumulate the energy it needs to pop through 55.50 and start attacking 1960. Again, my target up top is 67.25 and 68.75. So I'm saying at about 68 even is the next measured move target. Okay, overall, the market's still behaving as usual. It's not there's nothing outstanding. I don't see anything in the internals that says anything has changed. The market's firmly strong and continues to be so. It is buying back every dip still, and you could see it in the movement of the point of control here. Point of control moving up, then starting to move down, and then finally it reversed on Friday, expecting continuation higher of these point of controls as we move forward into the week. Mind you, again, this is a shortened week. It is non-farm payrolls week in addition to a holiday, so it's the action is expected to be somewhat compacted. Don't forget, Thursday has a ton in it. Has the ECB rate decision at 6:45 a.m. Chicago time. ECB's Draghi speaking at the same time as the non-farm payrolls and unemployment numbers, as well as initial claims and trade balance, PMI services, all of those coming out at the same time on Thursday. So Thursday is expected to go out with a bang. I'll leave you with that. Additional risk, headline risk. Not much news there. The Ukraine and Russia have chilled out, and the focus is on ISIS in Iraq. And any advancement there, the Iraqis are fighting back and trying to take back all major installations, key spots. But ISIS is gaining momentum still, and it does not look good. It looks like it's going to be an ugly mess for a while. So, looking for news from out of there. Other than that, it's really this, summer trade. It's about being patient and waiting for your setups, waiting for your spots. This is a great market to get lured in because it's a jerky, then breaking, then jerky, then breaking, and it's very easy to get yourself flipped around. The market opens in about 30 seconds. Good luck.